He sold over 240,000 shares the morning of the announcement. I'm sorry, what? What's up, everybody? In today's video, we're going to be talking about some things to consider before you buy Moderna stock, as well as 3 stocks that the market is running away from that I think you should be running to. All that and more coming up. There's no question that Moderna Inc. is the most popular stock in biotech right now. It is said to be the leader in the race towards a vaccine against the Rona. Since their start of the pandemic, Moderna has risen nearly 500%. But since their announcement of positive phase 1 results, Moderna has engaged in some highly questionable practices. That has me changing my tune a little bit as to whether or not anyone should be investing in this company. Since Moderna has announced their successful phase 1 trials 2 Mondays ago on May 18th, the S&P 500 jumped nearly 6% in an incredible move on hopes that a vaccine for the Rona means that we can see some sort of sense of normalcy. That, along with states being able to open back up for business and a rise in demand for travel, has been a perfect storm to send the stock market soaring. You know what else has been soaring? This channel, and it's been because you guys have been absolutely incredible at loving on that like button. So if you'd like to continue to help this channel leap into higher highs, love on it some more, guys, and I will keep pouring myself into this to give you the best content I can and hopefully continue to make some money along the way as well. Vaccines are seen as the key element to putting an end to the restriction on work and life that have devastated the global economy, and in returning to doing the things that we love, being with the people that we love. And let's be honest, I need a damn haircut too. Around the globe, there are nearly 5 million positive cases and over 300,000 have been killed by the disease as of this recording. With so much on the line, so many companies have thrown their hat into the ring. This is a worldwide effort, and for the moment, Moderna, ticker symbol MRNA, and Pfizer, ticker symbol PFE, are leading this race in a pack of at least 100 biotech companies. You heard me right. 100. Mark Poznansky, director of the Vaccine and Immunotherapy Center at Massachusetts General Hospital, told Yahoo Finance recently that there were at least 100 horses in the race, and we've got some leaders up front. By now, we already know Moderna is said to be leading the way here. Moderna has already advanced quite a bit in its vaccine development, as it is the first company to have entered into phase 2 clinical trials of its experiment Rona vaccine, and so far, the results have been hopeful. Keep in mind, though, that we are still a long ways off from here to achieving an actual vaccine. According to analysts at Morgan Stanley, an effective treatment is unlikely until the first half of 2021 at the earliest, with many health experts cautioning that aggressive development timelines are aspirational at best. So this means that there's still plenty of time left before we approach the final lap in this race for the vaccine. Moderna has also been a bit controversial in that literally a day after announcing positive phase 1 results, they issue a massive offering totaling $1.5 billion. $1.5 billion in shares of common stock, a total of 17.6 million new shares, with a 30-day option to offer another $187 million in shares. In case you're not aware, that is an insane amount of shares that would dilute the stock and thus make your investment less valuable. Now, in some cases, this is not always a bad thing. As we know, Tesla has made offerings and it really barely even budged the stock at all. Moderna plans to use the capital to further advance their efforts to develop vaccine. But here's what's stuck in my craw, guys, and quite honestly, it just pisses me off. In the 2 days following the announcement of the phase 1 trials, Moderna executives raked in more than $29 million in gains from selling shares into the company. Much of this sold at prices near the top of Moderna's surge in value when it was up over $80 a share. Among the 4 executives is Chief Financial Officer Lawrence Kim, who will actually be leaving Moderna in August. He sold over 240,000 shares the morning of the announcement. I'm sorry, what? Take a look at this Form 4, which is an SEC filing that has to be submitted whenever officers of a company buy or sell shares of their own stock. And as you can see, nearly 250,000 shares get dumped right into the announcement of these positive phase 1 trials. Coincidence? According to Moderna, These sales were a part of a pre-planned 10b5-1 sales. Moderna said in a prepared statement, such sales are common among corporate executives. They are scheduled in advance, so the executives can't be accused of timing them to profit from non-public information about their companies. But in my opinion, there was nothing automatic about Moderna's press release about the vaccine, which by hours or days, the executives scheduled stock deals. The timing of the vaccine announcement was entirely under the control of Moderna. And so here's where I call this a bunch of flat out BS. And I'm not the only one. Now, there are several class action lawsuits being submitted to address this coincidence, and if foul play is involved, I think this could end up costing Moderna a lot more than $29 million. One final thought here about Moderna before I get into the stocks to watch is this: if Moderna wins this race to a vaccine, none of this will likely matter. The stock will run well into the $100 range, and milk and honey will flow, and all will be right in the world. However, in the famous words of Ricky Bobby, if you ain't first, you're last. Never did I think those words would be ones to live by, but in this race, it's true. Nearly 100 companies are gunning for Moderna, and we've already seen companies like Novavax, GlaxoSmithKline, Johnson & Johnson, and others beginning to close the gap. The bottom line is this: the risk is high, but so is the reward, and you have to ask yourself what you're willing to lose if the biotech company you go with isn't first. So what are your thoughts on this? Do you still like Moderna? Why or why not? Now, all that being said, the overall market has been loving the news of a possible vaccine, and the indexes are quite near where they were pre-crash. And because of this hope on businesses opening back up and travel demand increasing again, people are running away from these so-called Rona or stay-at-home plays, which I really don't get, if I'm honest with you. Have we all forgotten that nearly 40 million people are without a job? Sure, companies like Amazon, Walmart, and Costco, they can't hire people fast enough. But how many small businesses, which make up about 80% of our economy, went under so far? Look, I think the markets and the optimism are great, and I'm certainly hopeful, but we've now let the genie out of the bottle when it comes to working remotely. We've already talked last week about Facebook's plan to have 50% of their workforce working from home, and they're not the only ones making this discovery. I think this is going to be the way of the world moving forward, and these three stocks are going to be worth grabbing the dip on, in my opinion. The first one worth looking at here is Palo Alto Networks, ticker symbol PANW. The stock has slid from its $247 high just a few days ago all the way down to $223 a share as of this recording. Last week, we spoke about how much more important cybersecurity was going to become, and we shed some light on what CrowdStrike was doing. Palo Alto is in the same space and claimed to be the leaders in this industry. Last quarter, they had some incredible numbers. Palo Alto Networks' Q3 revenue was $869 million, 20% higher than a year ago, and representing a much higher growth than management had forecasted in the year earlier. Not to mention the acquisition of software-defined network security leader CloudGenix closed on April 21st, which contributed to some of the results, but it's been Palo Alto's aggressive cloud-based security vendor purchasing over the last 2 years that's accounted for most of the big jump. CEO Nikesh Arora was quoted as saying in his letter to shareholders, "Work from home is here to stay. Securing homes as well as offices will be increasingly important to keep digital operations safe. Migrating to cloud-based systems will accelerate support remote work and update legacy operating procedures. As work from home and the cloud become more commonplace, organizations will need to automate parts of business like logistics and billing using AI. Many organizations will begin looking to reduce the number of cybersecurity and technology vendors and use to simplify their processes, and that's where Palo Alto comes in." I couldn't agree more with this, and I feel this recent sell-off could really present itself a great opportunity to buy this up before it does inevitably go higher. Next, there's Wix. Now, if you've been following this channel for a little bit, Wix was featured on a few Stock Watch Sundays back before its earnings call, which since then yielded more than 30%. As of this recording, it has dropped off from $220 highs down to about $195 a share. I think this yet again is a perfect opportunity to grab this dip, as there have been some crazy demand here. We already know e-commerce platforms have been on fire since the pandemic. Companies such as Etsy, which yes, I'm still very much a fan of, doubled their storefronts in April, and so therefore more small businesses are going to live online. And they're going to need a website. Wix often gets overlooked because of its e-commerce peer Shopify, which has gone utterly insane. but Wix is a quarter of the cost. Management said the Rona response has led to many customers canceling services, but the surge in new users has more than offset the losses. In the first quarter, 6.9 million users were added, bringing Wix's grand total to 172 million, which is a 16% increase from last year. However, as the crisis deepened, Wix said it had 3.2 million new users register in the month of April alone. I can only imagine what May will look like. If you're looking for an alternative to Shopify, Wix may be the one for you. Lastly, there's Chegg Inc., ticker symbol CHGG, which has fallen from its $67 highs just a few days ago all the way down to $55 as of this recording. Chegg engages in the operations of learning platforms for students. The firm offers required and non-required scholastic materials, including textbooks in any format, access to online homework help and textbook solutions, course organization, and scheduling as well. When back to school season comes back, I think many colleges and even primary schools may have a lot more online learning options, and that's where I think Chegg shines. This will provide a safer option for students and may actually save the schools some money. Given that the states have had their budgets obliterated, Chegg may become a huge asset to them as they get back up and running. But that's going to do it for me, folks. Let me know what you think about today's video in the comments. Also, if you wanted to check out one of my latest videos about how Facebook is shifting how we invest, click this video here. And if you want to see the top 10 stocks millennials have invested in, click here. And as always, folks, I will see you all before the bell, and B. Smith is out.